Just a reminder, everyone, of the disclaimer. So anything we talk about today is for educational, entertainment, and information purposes only. Hey, everybody. So we'll talk a little bit about covered calls on MSTR. So as you know, I've been trading MSTR for the better part of, say, 8 or 9 months. And it really gives you kind of all kinds of interesting things because it's so volatile. It has very high volatility, but it can get low as it has recently. So you kind of get like 1, 2 year moves in volatility in short periods of time. So it's interesting as a thing to study. And of course, as a thing to trade, you kind of get a lot going on, lots of skew flying up and down, as I'll show you in a moment. So we can see that Bitcoin, I just want to put this out there again. A few very smart people have put it out saying Bitcoin over the last few years has really kind of acted like leveraged QQQ. So you can see leveraged QQQ in the orange. So here's your QQQ moving around, and Bitcoin in the blue, which is moving around with it. What have we seen lately? Well, we've seen the market fall out of bed and the Qs really get hammered. Bitcoin is actually hanging in there. So I'm going to caveat today's talk with the fact that, look, this could just be lagging, right? So in a very serious liquidity event, we may see people just go and sell anything that they're up money on. And it's interesting that it didn't happen last week. We sort of had a Thursday, Friday kind of 11% sell-off, depending on what index you're looking at, or over 2 days. And Bitcoin kind of hung in there. So very impressive performance. But if the liquidity event continues, and it may, if these tariffs stay in place, things could get a lot uglier if you start to bring down earnings and apply a reasonable multiple to this market. It's not out of the question. I'm not saying this is the case, and I've been adding some risk, but we could get down to 4,000, 3,500. I mean, anything could happen if we really get into a recession with an appropriate multiple of 14, 15. So anything can happen. But having said that, maybe we get a little reprieve. We are very oversold, and we're starting to hear that a lot of countries are calling Trump and saying, listen, we want to talk. We want to talk. Now, I suspect that smaller countries that aren't as important as China, the European region, they're probably not gonna want to chit chat quite as quickly. So I don't think that fact is a big deal at this point, but we'll see what happens. It almost feels like things can't get much worse unless this guy really wants to tank the global economy, and then really all bets are off on where stocks need to be trading. So I'm going to assume that Bitcoin is kind of going to hang in there, which is kind of interesting. Now, if the market rallies on Monday, maybe Bitcoin gives back a little bit just because it's been almost a place of safety. So we can't discount that possibility. But let's take a look at, here's your IBIT. So this is kind of Bitcoin, right? So we've kind of had it hang out. We've given up a little bit early in the week, and then kind of didn't really go anywhere. A nice rally on Friday, in fact, as the market got slaughtered. Let's take a look at MSTR, which is our another star of the week, which was started to break out past this trend line here, came down, touched, back up, came down, touched again on Friday, and bounced. So it was one of the few names that was actually up on Friday. My MTI got a little bit green, then gave it up. So the MTI is not looking spectacular, but the reason I got into my long option position is I looked at volatility levels, option pricing levels around the market, and they were all starting to get rather high, as you would expect them to in a VIX 30 plus environment. But this, this particular implied vol was quite low. So we're trading at very kind of low levels of the year, somewhat surprising considering we have had a couple of 100-point moves, really several 100-point moves on this thing in the last month. But it's cheap, so I put on the strangle, and we'll kind of see how this works out. But the idea is that we're really kind of sitting above this trend line. I'm going to give Bitcoin the benefit of the doubt and let it go. But I'm seeing some people saying, "Oh, I want to sell lots. I want to sell covered calls against my MSTR position." And I'm not sure that's a great idea at this point. Now, we do have implied volatility coming up to some extent. But as anybody who's been watching my stuff over time understands, and I ran hundreds of millions in cover call funds for years and years, and there oftentimes cover calls are really not a great strategy, except when implied volatility starts to kick up. You get into a little bit of a more high vol environment. You get those higher IV percentiles, and things are just a little bit more, in an area of concern that suddenly this upside skew maybe sometimes starts to kick in a little bit. Generally speaking, your edge is going to come from implied volatility being a little bit higher, right? So let's take a look at 30-day volatility. We can see that in the gold here, or in the orange, and it's kind of bouncing up right in here. So off those low levels that we saw a couple of weeks ago, and you're just starting to push up a little bit. Now, is it getting really, really high? So we're back up to the 65th IV percentile. Now, rank is still quite low. And that's because we have this really, really massive spike from November, December, where MSTR went bananas, hit 550 back then. And so sometimes, especially a product like this, when it goes parabolic, is going to price in that upside, particularly in the call side. So we saw those calls explode in value, and we hit these very high levels of around 220 vol, 220 implied volatility, and we've given that back since. So we've come all the way from 227 or so down to around 74. That is incredible. 1/3 of the implied volatility as this thing started to calm down and go rather more sideways. So I think it's a little bit on the it's not as low as it was a few days ago. So from that perspective, cover calls are starting to get a little bit interesting, right? For cover calls, you really need to have as many layers of edge as you can find. Whereas if you're a put seller, generally puts are priced steeply and the market doesn't realize to the downside as much, meaning those puts tend to be overpriced. So that volatility risk premium tends to be a little richer over time and probably pays a little better. With cover calls, you have that risk of giving away that upside. And I don't like to take that risk unless I'm given more than just one piece of edge, right? So it might, if that edge is, volatility starting to go up, 65th percentile, that's starting to get a little bit on the high side. That's probably in a range that I like to sell cover calls. So I don't mind that. It's certainly better than 17 where it was a few days ago, right? So this is a big difference. So now we're starting to get a little bit more fear getting absorbed into this particular product, not as a result of MSTR doing anything fearful, but as a result of just the broader environment having very heightened fear levels. I think we closed at a VIX 43, 44, 45. And that's very, very nervous. You rarely see it that high. So this uncertainty is getting absorbed into names that may actually be doing okay. And so from that perspective, it might be interesting to have some cover calls. And from the perspective that the Bitcoin may ultimately give it up if we do continue with a liquidity event that demands that people start selling across the board. They're going to sell everything, gold, Bitcoin. They're going to sell anything that isn't nailed down because they need to make up for margin calls and pain that they're experiencing elsewhere. So we'll see about that. But one thing that holds me back from doing this is if we look at the skew on MSTR, it's extremely cheap to the upside. And that's part of my thesis for owning this upside. I have a little bit of downside, but I own the upside because I think I'm kind of going to bet that this chart has some potential to continue on and outperform. So I kind of feel like this thing's going to bounce back and maybe head towards 378, 380, maybe even 400. It's been acting quite well in the face of, a fairly soft market lately, to put it lightly. And so if this thing gets going, I've got that long delta in this position that I'm going to enjoy. But given the technical backdrop, given the relative strength that this thing has exhibited, and certainly given the upside skew that is very, very cheap. So look at this would be your 90th percentile of where upside would trade on something like this. I've got 3 different expiries in here, right? I've got May 2nd, which is about a month away. I've got June regular, and I've got July regular. So you can see that here in gray, this is going to be your June. The yellow is going to be your July. And the whatever that is, turquoise, is going to be your May 2nd expiry, so 28 days away. So we can see that May, as you'd expect, is kind of a little bit backwardated, right? You've got this higher volatility. and then you've got a little bit lower and then a little bit lower again in July. So it's definitely backwardated, which we're seeing across the market, which means that front month volatility, those front month options are a little bit more expensive given what's happening in the world. Certainly that VIX curve is very backwardated. But if you look out, if we were to sort of position at the 350 strike or the 400 strike, look at where this typically trades on MSTR. So typically a 90-day option or a 105-day option, as in this case, would trade quite a bit higher. We'd be trading probably at the 90th percentile about 113 implied volatility, whereas right now we're trading at an 88 percentile. You see that? So we're trading in an 88 percentile way down here, whereas normally this can generally trade at around 114 implied volatility at that 90th percentile. So the top of the band is the 90th, the bottom of the band is the 10th. So it kind of gives you a little bit of a range to kind of have an idea of relative levels that you may see over time from a 105 DTE option. So we've got this 90th percentile up around 114 implied volatility versus 88. So I think there's some potential. Number one, if MSTR starts to get going to the upside, I think implied volatility can actually continue to rise, generally speaking. As well, I think that there's the potential for upside skew to normalize. So right now, what I mean by normalize is right now we're sort of trading nearer to the bottom of this area here, right? So we're not at the very bottom, we're not at the 10th percentile, but we are a little bit higher than the 10th percentile, but we're still kind of low. We're well below that midpoint and certainly very far below the 90th percentile of where 100 DTE implied volatility would trade at this particular delta, which is the 33 delta. So the point being that if we start to get going on MSTR to the upside, we could see some of those animal spirits return to Bitcoin, to MSTR, maybe to Coinbase, to some of the miners, and this could express itself in the curve steepening to the upside, right? So maybe we start to get a little bit of steeper upside call skew, which is more normalized. For this kind of product, it's not happening right now, a bit like gold. Gold's kind of inverted as well, which is unusual. That upside is cheap. So if you really like gold, upside calls are actually pricing quite nicely. But in this product, this is very, very flat. So number one, I feel like the implied volatility in June and July here, I'm not going to ignore this May right now, but I think the implied volatility in June and July is kind of a little bit inexpensive, and certainly versus the broader market where option prices are kind of exploding all throughout the market. And I think that upside skew is actually kind of reasonable. So I've been telling some mentoring students, just saying, this, you kind of have to like Bitcoin, but I think that upside is a little bit on the cheap side. So you can play that by just buying some out of the money calls. If you really want to cut down on the cost, you could do a call spread, which doesn't price as well as it normally would on this product. Normally you'd be buying an implied volatility here and you'd be selling one up here if the skew was more normalized, which is call skew being steep. Right now it's flat. So you're not really getting as much for that call that you're selling. So you kind of you have flat skew, but that's okay. It's still kind of cutting down on your costs, right? At least you're getting a long delta position. You're taking part in it. If I had to choose, I wouldn't want to give up that upside. It's not giving me as much edge. That actual short leg isn't giving me the edge that I want. So I would take the same amount of money I was going to spend on the call spread, and I would just kind of use that and buy fewer calls, let's say, and just keep that full upside convexity, right? That full massive upside potential. So hopefully that gives you an idea of what I'm thinking on MSTR. I don't think it's a great covered call sale right now, just because look at what you've got here. You've got this upside skew that's kind of compressed. And so for me, it's not to say that it's not going to work for you. You are getting a little bit of edge from the broader market being very having a difficult situation, you are getting a little bit of edge from the perspective of that implied volatility having risen a little bit, but you can see that it's still kind of not that high, right? It's not even at the midway point. So it's not exciting me to a great extent. And you've got that upside skew that isn't great. So remember, it's not about having a crystal ball. If you sell some calls here and this thing goes down, then you're probably going to do okay on those calls, right? You're gonna at least have hedged some of your position. But from the perspective of edge, which is how I like to look at things, right? Is this worth it or isn't this worth it? Am I giving up edge or am I getting edge? And so from this perspective, I think you're giving up a little edge. If you look at implied volatility versus historical volatility, this thing is moving a lot more than options are pricing in. So I'm giving up some volatility risk premium edge, right? It's negative vol risk premium. And I'm not getting very good skew to the upside. So I had a few questions about this. I wanted to put out another video just explaining my position on it. Hopefully that makes sense, and we'll see you guys in the next video.